This week, really,
Morning.
that the trading year begins for 2011. Given the kind of tone we've seen over the first week of the year, though, where volumes have already been notably high on the equity front, what are your broad expectations for the trading year ahead?
Well, I really expected a much stronger rally in the fourth quarter last year, which we didn't get. It sort of petered out into Christmas, and I think we're now getting that response. We've flown out of the blocks at the beginning of the year. We've had 8 straight up sessions. We had $1 billion shillings traded on Friday last week. So it looks to me as if the market is is in a nascent bull run again. And I see lots of progress to the upside. I think GDP, which was 6.1% in the third quarter and might well accelerate further, is a very, very strong tailwind behind the equity market.
In fact, that growth story is much of the basis for the optimism that we're seeing right now. Just Friday, we had an announcement that Kenya's horticulture export earnings were up 9% to 78 billion shillings last year. That sector, Kenya's leading foreign exchange earner. Also, tourism not seeming to be doing too badly either, after Kenya Airways said that the December period did them quite well.
Absolutely. If I look across the economy, I think you're seeing a much more muscular economy across the board, pretty much. Tea is also not to be ignored. The tea prices started off at $2.81 a kilogram in Mombasa last week, and that's over $1 billion worth of foreign exchange earnings. Tourism, as you said, is on the bounce. Generally, the economy, if you drill down into the data, the economy is firing on many more cylinders than it has for some time. And I think the key fly in the ointment is the political dispensation. That, we have to keep an eye on. But otherwise, the economy looks set fair. And I think that's translating already into people reaching for banking stocks, which have the highest correlation to GDP. And you can see those banking stocks breaking key resistance levels. KCB crossed 24, something it hadn't done for 2 years. Equity Bank is within 10% of its all-time high, and you're seeing very, very powerful responses on the markets.
With those big caps touching all-time highs, though, a lot of the focus on big caps right now. What is your anticipation in terms of their overall performance moving forward? Because this is in a context where we've had the mid-tier banks not operating as strongly and being ignored, one can say, to a large extent.
I think that's an interesting question you're posing, and I think it tells me that what we're seeing is a very big macro allocation into sub-Saharan equities. You saw a strong response in Nigeria, and it's pretty much across the board. And I think these big macro funds have to allocate to the big caps, which means that the valuations are stretching quite considerably. Equity Bank, Co-op Bank on price earnings ratios of 25, admittedly ahead of very, very strong results, full year results, which will be due. But I think for stock pickers, you've got to look down a little bit, as you are mentioning, and look at things like NIC, Diamond Trust, which are all on forward Ps of 10. And there's plenty of activity where you can look further down, and I think there's much more value in the mid-tier sort of part of this stock exchange.
In the meantime, let's shift focus to Safaricom. It moved up 2.3% with increased buying activity on Friday. That despite the news of its SMS tariff reduction. We know that you're quite a bull on the company in the first place, Aly Khan, but at 4 shillings 80, what's the anticipated upside there?
Well, I think it's on a price earnings of about 12.7, which is very low compared to the rest of the market. I think, it's held by so many people in Kenya, more than 800,000 shareholders. These people got absolutely blitzkrieged when Airtel first came in last year. They panicked, and you saw this dramatic price move all the way down to 4.45. It looks a very oversold share to me. It's going to be a grind higher, but I think fair value is around 5 shillings and 70 cents at the moment.